The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Welcome to our Manipulators webinar. I'm so glad that so many of you are interested in manipulating markets, and the way I use that expression, it's not quite as fearsome as it sounds because it's entirely legal. And also good morning to our friends in the Southern Hemisphere. I see Sage is here, and of course we'd be lost without Sage. I don't know if we even start without Sage, but anyway, there we are. And Tom's here. Tom sent me an email the other day saying they'd signed up with another firm to give them advice, so good luck with that, Tom. Alan, hello, mate. Alan Varian's been to a Danielcode tutorial. Bill's with us. He's coming to the next. I met Bill in Melbourne the other day. He's a fighting Sikh, hell of a guy. Bill Ford and Brian Baird might be coming to a tutorial as well. And Hank, my friend, who's just told me he's hearing me well, I'm going to talk him into it. John Barnes in Ontario. Hello, mate. It turns out you live not far from Terry, who runs the website for me. He was saying you're sort of maybe an hour, a couple of hours apart. So good to see you guys all here. Lots of other people. Chase will be growling at me for not having given up smoking, but I've given up everything else. Alex, nice to see you here. Lots of guys, all our good friends. Craig, got to make up your mind about coming to tutorial, mate. I'm going to talk about that in a minute. Daryl, you're coming. David Webb, the king of the black lines. Don, oh Lord, we've got so many. Franklin, nice to see you here, Franklin. Gary, you're another one thinking of coming. Oh, you are coming to a tutorial. That's great. Hank Woolley, my friend. Yes, Harold Fish, the Gold King. James Gillies is coming to the tutorial. Be nice to meet you, James. Gosh, I can't go on saying hello to everyone. Justin, I'm going to tell a story about you guys in a minute. Marcel, my friend, I hope you're feeling really well. Marcel's a great old supporter of ours, been with us for years and years. There's a lovely Marilyn. Time you came. And, of course, Mike Midsos. Mike, good to see you. I'm going to be talking about you as well, mate. And Steve Catsley, yeah. Okay, All Black Parade in Wellington right now. God, love it. Folks, a couple of extraordinary things have been going on. If you don't follow rugby, you're probably not aware of it. But I'm a rugby tragic. I played rugby all of my younger life. In fact, I was still playing rugby when I was 33, which is probably far too old, and why I've got arthritis from broken joints and bones all over the place. But it's a funny game, rugby. It's a game you really, really need to know the rules and understand. And a bit like trading, a vast majority of the games are not so great. But at the highest level, when it's played really, really well, it really is a thing of, it's a spectacle. It's exciting. It's wonderful. And nobody plays the game better than the All Blacks, which is New Zealand. And it's kind of interesting. New Zealand's a very small country, only 4 million people, about 20 million sheep. And it has fewer registered players than Australia or any of the home countries, England, Scotland, Ireland, Wales. The European countries, many, many fewer, but it is the best rugby team in the world, might be arguably the best rugby team of all time. And the playoffs, the semi-finals and the finals of the World Cup in England that's been going on for the last month or so were really extraordinary. So Sage is just telling me that the All Blacks are having a welcome parade in Wellington, the capital of New Zealand, which is great. So that was wonderful. Any of you into horse racing? The Melbourne Cup last Tuesday. The richest staying race in the world, $6.5 million prize money, was won by a girl rider, Michelle Payne. First woman to win the Melbourne Cup. Girls don't get much of a go in this horse business, but she rode a brilliant tactical race. She outsmarted the boys, and 100 to 1 chance not fancied. It was a silly price because he'd only been beaten ahead in the Moonee Valley Cup 2 weeks before, and the horse that beat him by a head was at 30 to 1, so it was a silly price, and it was great romantic story. Her brother, the strapper of the horse, is a young man with Down syndrome, does a wonderful job with the horses. Was a real feel-good story. So there's been a bit of good stuff happening in the world. More importantly, there's been some great trading. And it's delightful to have you here with us today. And we're going to show you today some extraordinary stuff. And I'm going to show you how you can manipulate your trading. This is the sort of thing I teach at tutorial. So let's move on. The first point to tell you, folks, is that the Danielcode tutorial at Waiheke Island in New Zealand is coming up in 1 month. So those of you who are thinking of coming, and there's a few of you here today who've written to me showing interest, but I haven't heard back from you. You need to get your bookings made. The hotel is holding some rooms for us until the 13th, which is a week away. Thanks, Sage. Yes, I'm glad you're here. No, Chris hasn't contacted me. I know some of these people who write you lots of emails with lots of questions sometimes finish up being a waste of time, don't they? Anyway, Waiheke in a month, folks. Hotel's holding some bookings for us until the 13th. So go ahead, please, and contact the hotel, folks, if you're coming, and make your booking. And this is a picture. This actually is Onetangi Beach, part of it. This is where the tutorial is going to be. So this is New Zealand, the land of the long white cloud, sometimes called the Shaky Isles. It's a beautiful place. I'm Australian, but my wife's a Kiwi, and we've actually lived there for 12 years. And as soon as my children finish university in Australia, I'm going back there. Daryl Kaur, no sound. Everyone else good for sound? Sage, you good for sound? Everyone else good? Seems to be coming out from this end all right. I don't know why. Daryl, sound is fine. Just bear with me while I... Okay, Daryl's got it back. No, it's just your end, Daryl, apparently. Bill's got it. Yeah, it's good. Excuse me, this is New Zealand. Two beautiful islands and a lot of little islands just east of Australia across the Tasman Sea, sometimes referred to as the Ditch. And where you'll be going to, folks, you'll be flying into Auckland, which is this big dot here. That's not the capital of New Zealand, but it's the commercial capital of New Zealand. The capital of New Zealand, in fact, is Wellington, which is where Parliament House is, but all of the actions shifted north over the years, and Auckland is the biggest city, the commercial hub of New Zealand. That's where you fly into, and then you catch a ferry for 30 or 35 minutes, and it takes you over to Waiheke Island. And I've put a note down the bottom saying this is where your life will change. And it will if you go to a tutorial and you want to make a career out of trading, or you want to have your freedom of your own life for the rest of your days. The best way I know is to learn how to trade at a very, very high level, which is what the tutorials teach you. This is Waiheke. This is the ferry that goes into Waiheke. If you look at the top of the photo, it hasn't quite changed for you people yet. It's changing now. If you look right at the top of the photo, those buildings you see, that's the city of Auckland. It's not a very big city by international standards, but it's a big city by by New Zealand standards. And this is a photo of the Waiheke Ferry on its way back to Auckland. So nothing too daunting there. It's a very, very pleasant trip. And lots of people actually commute. They live on Waiheke and go into Auckland to work every day. So this, what I'm showing you here, let me get my little spotlight. This is actually Onetangi Beach. This is actually where we're going to be. This here, these are the apartments. This is the Onetangi Beach apartments where you'll be staying. I've stayed there at our last tutorial. Sage and Daryl were there with us. Lots of other people. Peter Andrews, who's coming to this tutorial. And Daryl Kaur, of course. We had a great time. It's very, very nice. And this up here is the venue. This is where we have our teaching and our lunches and drinks and cocktail party. and you literally just walk on the road and stroll down. Very casual, shorts that time of the year, just be cool and comfortable. And that's the venue. So we don't really move much off Onetangi Beach, except we drive up to the centre of the island to have our celebratory dinner, and then we go to a few vineyards up there and show you around this truly, truly beautiful place. Right up the end here, there's a restaurant, bar, combined, big outdoor area. Very, very nice, and everything's beautifully self-contained, actually. So let's talk about that a little bit more, because you need to be making your bookings at the Onetangi Beach Apartments. Go to the Danielcode website, folks, if you will, www.thedanielcode.com. I can probably bring it up fairly quickly here, and you can see that just here is the syllabus of what we're going to be teaching you and talking about, and underneath is a document I've entitled "What Others Say," to give you an idea of what happens at these tutorials and what you can expect to get out of it. The interesting that I've headed this next page, which you're now seeing, can we really manipulate data? And this is an email I got just last week from Mitzi7, who's actually with us today at this webinar. Mike, hello, mate. Good to see you here. And Mike's a Danielcode subscriber, of course, who came to the LA tutorial in May. He's a very, very keen trader, but what I really taught him was how to manipulate markets. And you can see from here, if you read this through, quite extraordinary. He's saying, I attended it in May, it's now October, I paid for the tutorial 20-fold, you read that right, from the material he taught at the tutorial. So the fee for that tutorial was $7,000. So Mike has made at least $140,000, probably a lot more, since June, really, and that's pretty extraordinary, and I can teach you to do exactly that. If you want to be a really good trader like Mike, you have to be dedicated, you have to be determined, and you have to follow through, and that's all you need. You don't need a big account. The name of this game is to take a small account and make it into a big account. And you don't even need a lot of money to come to the tutorials. If the fee's too much for you or not convenient, just let me know, and we can spread your payments over a time that suits you. We've done this for a number of our clients. I'm happy to do it for you, but don't miss this chance. If you seriously want to become a very profitable and safe trader, you have to come to a tutorial, because the material I teach you at the tutorial is unlike anything you will see anywhere else. You will not see it on this website, and you won't hear the detail of it in webinars, because it's not something simply that I can tot out there for you. It takes a fair bit of time and discussion to make sure you get it. And the point of our tutorials is I do make sure you get it. With the follow-up, we'll have at least 4 tutorials, 4 webinars just for the tutorial folks after the tutorial to make sure you get it. And we have one-on-ones with everyone who's been to a tutorial, and you can have as many of those follow-ups as you need. And my mate Matt, who's a new mate, I met him in Los Angeles at the tutorial, says it's life-changing indeed, and Matt's a broker, pretty tough guy. So the main point is, folks, if you can come to this tutorial, don't let anything put you off. Just get there. If you need some accommodation to pay your fees, some time to pay, let me know. I'm happy to extend that facility to anyone who wants to come. The point is to get you up to the very, very high level of trading that we can get you to at a tutorial. And we have to do that with you personally, and it takes time. And at the tutorial, I spend 3 days and 3 nights with you, maybe more if you want to come a day or two earlier. And we talk trading, and just trading, well, a few other things as well, a bit of rugby, a bit of horse racing, a few lies about our past history. but that's the only way you're going to learn this manipulation stuff. And what we really do at the tutorial, I'm going to show you quite a bit of it today, is we teach you how to manipulate data. Now, let's be clear. I wanted to just tell you that I forgot to tell you that Mike is a dentist. Mitzi Seven, the guy who wrote this to me. And it's interesting that the people who are attracted to trading, and I have found that some of the very best of them, funnily enough, are dentists and engineers, because they're people who are used to examining things critically, making a decision, and then building something. That seems to be this perseverance, this ability to stick on with things and just persevere until things come to fruition. I would say that's the main thing with to become a really successful trader. I can teach you, I can tell you, and I can keep telling you, but you need to be determined to get there, because as you can see from this post from Mike, the rewards are absolutely mighty, and I can get you there at this tutorial. So there's 3 or 4 of you here today who've indicated you might be interested, and I haven't heard back from you. I do urge you, write to me, let me know. And we have 17 people coming to the tutorial. We can handle 20. So there are 3 places still available. Please let me know as soon as possible if you're coming. And if you're not coming, then think again, because this is an opportunity you won't want to miss. And I hope some of what I'm going to show you in this tutorial is going to make that point. Okay, let's move on. And I've headed this as an introduction to what I'm going to show you. Can we really manipulate data? I hope by the end of this webinar you're going to be amazed and astonished. Now, here is a run, this page should have changed by now, of all of the futures signals that I commonly cover. And it shows you what happens with standard signals. One of the unspoken messages about trading is that all markets have a different rhythm and a different speed, and they are like individuals. They have different little perks and characteristics. And if you look at this, let's run from the top. I'll get my, you might be able to see this cursor here. GX is the DAX. RB, I'll get my spotlight here to make it clear to you. RB, in case you don't know some of these signals, that's gasoline, heating oil, coffee, palladium, crude oil, wheat, gold, live cattle, feeder cattle, hogs. Is LE hogs? I don't know. It's not one I use much. Soybeans, copper, corn, sugar, the S&P E-minis, ES, AP is the Australian share price index, NASDAQ, natural gas, EMDs, the mid caps in the US, the mid cap index, and TF is the Russell. So you can see some of these are very good, some of them are not bad, and some of them are just downright awful. And that is what happens with the standard signals, because if you have a standard method of analyzing and creating signals for each market, you're going to be wrong as much as you're right. So just take a note, if you would, of 2 that we're going to explore a bit further. TF is the Russell 2000, showing a loss on its standard signals of 24,000, and ES is the E-mini, showing a loss of 4,300. The point is that we don't have to be restricted to standard signals. There's a whole lot of stuff we can manipulate. Now, there's different sorts of manipulation out there. The common form of manipulation is the big bad merchant banks manipulating data. There's the crooks who've been manipulating LIBOR. We know about that. There are crooks or working at these big investment banks who have been manipulating all sorts of things that we don't know about. And there's the high frequency guys who have been spoofing the market. They put in bids and offers into markets with no intention. They stay there for literally fractions of a second, and then they're gone. And they're spoofing the market to believe that there are more or less bids and offers in the market, with the view to attracting buyers at those prices, which they then front run. And that, to my mind, is clearly crooked. Most of the things, and lots of the things in this game are crooked, that it just seems to go on, and there never seem to be any real consequences. We find that, they get plea bargained away with no admission of failure, and they stay in the business, the vast majority of them. And that's really just a commentary on human nature that which we deal with every day, that it's easier to steal something or cheat someone than it is to work it out for yourself. And that's what a lot of these people do. In other sorts of markets, gold, for example, gold people are continually in a conspiracy mode. There's deep-seated belief and pages and pages of commentary that gold is manipulated downwards by the big investment bankers and the big bullion banks. And one of the silliest things, and there was another one this week, is these articles saying, there are these endless claims on gold, but there's not much bullion available. And I don't know why reputable websites allow this stuff to be published, but it goes on and on. It's part of the great conspiracy hoax because, it's simply not true. And this is the battle between people who sell and deal in bullion and real traders who trade COMEX gold futures. And COMEX gold futures give you instantaneous price discovery, which is what the bullion dealers don't want, because they don't sell their gold for the real price of gold. They sell it for a lot more than the price of gold. And COMEX gives you real disclosure of the actual price, the real price of gold. The other alternate is the price fixing in London. They have an AM and a PM fix, or they used to. I think they've probably only got one fix a day now, but that's a group of people who get together and decide what the price should be. And I would have no faith in that process at all, but I have great faith in COMEX, where you have to put up your money and put up margin before you're allowed to trade. So people who are giving expert opinion cut no ice with me, but people who put up real hard cash to trade, they're the people that really are the buyers and sellers in the market, and that is the closest thing you're ever going to get to the real price. So, they're the sorts of conspiracies that usually are associated with manipulation. I want to show you another sort of manipulation. I want to turn you into manipulators and show you just what can be done by manipulating your data. Now, at the last screen I showed you, asked you to take note that the Russell was showing a loss of $24,590 on its basic setting. This is run from January the 1st to October the 30th. It runs off a machine program, so you can assume it's probably 97, 98% correct. We do occasionally pick up faults even in the machine programs, but not many. Where is the recording be placed, Gary? Not sure what you mean. The recording of this, Gary, always goes up at the Danielcode website, www.thedanielcode.com, which is this website I showed you a minute ago. This is the Danielcode website, and the recording will come up underneath. Well, it'll come up, in fact, just where this banner here is. When Terry's finished processing it, he will post the recording. I hope that's the question you were asking, Gary. Sorry to interrupt, folks. Let's go back to where we were with the Russell. Okay, he's got that. Yes, good man. Okay, so let's have a look. That on our standard signals, we ran through all of the markets, treat them all the same, and you saw that the results are just hugely varied. They're all over the place. And of course, we don't trade that way, but they're the basic settings. So if your market analysis is the same on all markets, you can expect to get those sort of results. Some will be good, some will be not so good. Some will be downright awful. But we can change how we analyze and how we trade markets by manipulating our data. And there's a number of things we can do to manipulate it. We can manipulate the bars we're looking at. You probably only ever looked at daily bars, or you might have looked at time bars, 240 minute, 120 minute. I know people who look at 3-minute bars and tick bars. You can create a daily bar that runs from midday to midday, which I've done. Great deal of interest in that. I can't show it to you here; it's on another computer. But if you do that, you change the what you're seeing and what the programs are reading entirely. It's very rewarding. It's worth looking at. Just remember that the stops will be around the daily bars. So you always want to have your trade where it's going to run into the stops the other way. In other words, if you're buying, the stops on the short positions are above the high of the setup bar. That's the bulk of them. And if you can get the market, get your trade into there, then it will run up with a bit of acceleration. But here's the Russell on its basic settings, lost 24,500. Look what happens if we change the settings. And what we've done here is we've changed the speed of our analysis. In other words, we're no longer just looking at daily bars. We're looking at combinations of daily bars. And we've changed our entry point. And simply by doing those two things, we've changed this market. These are the signals that go up, very close to the signals that go up in our TO3 Plus programs for you that are so successful. You can see that we've turned this thing around by almost $40,000. It's gone from a $24,500 loss in the same period to a $14,000 profit. And that has simply been through manipulating the analysis and the market of the data we have commonly available. To that, we can add another level. If you're really a gung-ho trader, and I'll teach you how to do this, you can add a turbocharger. And for this same period, we have added another $6,000 in profit, and we've only added 7 additional trades over 10 months. So we've added a bit less than 1 trade a month, but we've added $6,000 to our return. And that's the sort of level of manipulation that we can achieve, and we do that commonly and all the time. Here's a look at another market. This is the Euro USD. This is the Forex market. All of the Danielcode stuff works exactly the same on Forex and futures. We don't spend as much time talking about Forex, which I apologize. We've got a lot of very, very keen we've got a lot of very keen Forex traders, and I should do more on it. But here we are. This is Euro US, again, beginning of the year to the end of October, 10 months. The standard signal settings, 12,700 and a 67 2/3, win percent, which is this column down here. Pretty nice, not bad. But we can then optimize that for profit by adjusting the signals. And again, we adjust our entry point, we adjust the stop, and we adjust the speed of the signals that we're creating for this market. Now, this is what I taught Mitzi 7 in Los Angeles, and what I'll teach you folks at Waiheke. And you've seen the comments from him, and he's here with us today. Mike, welcome. Good to have you here. We've now moved from a $12,000 profit, which was pretty nice. We've almost doubled that. We're up to 25,000. And in the process, we've actually increased our win percent. We've gone from 66 3/4 to 70%, or nearly 71%. And that's just one of the things we can do. We can then say, okay, for people who want to trade less, there's a lot of trades in there. That's 147 trades. We added 30% of the trades. We went from 117 to 147. You'll see I'm comparing this row to this row. We added 30% in the number of the trades, but we added close to 130% to our profit. We can then do other things. You can say, okay, that's far too much for me. I'm not, I don't really want to trade that often. So we can then, again, manipulate the settings so it becomes optimized for consistency. Now, this is exactly the same market. We're using exactly the same tools, but we're adjusting them now to optimize for consistency. And we now come down to this line here. We've now got $14,000 profit for the 10 months. Very, very nice. You need about a $2,000 margin to trade this Forex. This is the large contract. You move the decimal point 1 point to the left if you're trading mini contracts. Well, I've got some interesting comment here. There's always one idiot in the place. Martin H. Easy to change the system in hindsight. It's not hindsight, dear boy. I took the trouble to show you the comment from Mitzi7, who's been trading this exactly since June, and he's made something over 140% in about 4.5 months. So you need to get a grip on the things I'm showing you here, and if you're skeptical about it, try it. Come along and I'll teach you, and you can do it too. This is not hindsight. This is being done all the time by our clients, and I take the trouble to show you that. And I have the original of the document here. We always manage to get a narc or an idiot along who doesn't understand trading. Here's the optimized for consistency, and we've now, you can see what we've done here. We've still got a little bit more profit than we had with our standard settings, but look what's happened to our win percent. We've gone from 2/3 up to 92%, and we've cut down the number of trades down to 26 over a 10-month period. So this is only trading 2.5 or 3 times a month on the consistency. For those of you who like to trade not so often, this is what you can do. And when you get down to trading a very small number like this with a very, very high win percent, you can trade more than one market. You can just tailor this market settings to exactly how you want it. If you want to trade a bit more, you can trade 2 markets. You want to trade a bit more than that, you can make it 3 markets. So this stuff is infinitely, can be infinitely tailored to your own requirements. And then this line down the bottom here, which is pretty wild, and you'll see it's headed Add Turbo. For those of you who are really aggressive traders, you can add a turbo to your trading. You will see that we've gone from our optimized for 147 trades to 167 trades. We've only added an additional 20 trades in 10 months. It's only an additional 2 a month, but we've added $5,000 nearly to our return, which is pretty cool. Mitzi7 sending me a message saying, John, yes, mate. I know, the idiots are everywhere. There's always a clown somewhere, ain't there? That's what happens in this business, unfortunately. Okay, so let's move on. I also asked you to have a look and bear in mind the returns from the E-mini when I showed you all of the futures. And on the standard signal collection, you might recall, the E-mini S&P had a loss of $4,308. And by manipulating these signals, manipulating the data, these are the changes we can make. Just simply with our standard signals, this is pretty much the stuff you see on our TO3 Plus program. Plenty of you are on it, plenty of you are subscribers to it. No one's saying I create those with hindsight. Okay, nice post, thank you from Mitzi7, who's just said to me by message here, this is the guy I showed you his post earlier. I was skeptical as well, but I could not ignore the fact that after studying your work, it clearly works. I make all my money based off of the 4 seal lines where price and time are squared. SP500 in August, September, crude oil, coffee and sugar and natural gas this week. Yeah, and those also usually coincide, don't they? Often with the nice blue line trades, Mike. Thank you for that. That's very kind of you to take the trouble to post that and let us know. What Mike is referring to there is I've told you many times, I'll teach you at the tutorial, when we have price at a recognized Danielcode number or ratio and time at a recognized Danielcode ratio, we say time and price are squared. And when time and price are squared, a turn is almost inevitable. And that's what Mike's talking about. This is what you get from it. So we talked about the S&P E-mini earlier. I can get back to that. On our standard signals, we showed a loss of 4,308. Moving to standard signals, which is pretty much the TO3 plus signals, we've converted that $4,000 loss into 13,700 profit. We can then manipulate something as small as our stops there by just a few points, and we can add almost another $1,000. We can also manipulate it so that it optimizes for the win percent, in which case we've now sent our win percent from 65% up to almost 90%. We've had 19 trades in this run from January to November, and only 2 losers. For those of you that prefer a slower, steadier way of trading with a very, very high win percentage, and that then does allow you to trade a number of markets if you want more action. Same thing with this. Excuse me, Chase. We can then add turbo, and that involves a number of things that I'll teach you, one of which is we occasionally pyramid this market. Now, to pyramid the market, you add additional contracts at key times, and everyone says, oh, well, I need a bigger account because I need more margin. The true answer, which I'll teach you, is no, you don't. There's a few tricks of the trade that allow you to turbocharge your trades without having any additional funds in your account. So I expect Jerry will be calling me soon saying, oh, how do you do that? You can't do that. Of course you can do it. We've been doing it for years and years. And it's pretty good if you're a pretty aggressive trader. You can see when we add the turbo option, we've haven't done much, have we? We had a look at the number of trades. No turbo. We're at 73 trades for 13,000. Turbo, we've only added 2 trades in 10 months. But look at the difference in that we've nearly doubled our return. So it's extraordinary stuff. So Kevin, how do we manipulate the market? Well, yeah, I'm giving you an idea. It's something to think about. You need to manipulate the speed of the market. You need to manipulate the entry points. You need to manipulate your stop loss, and all of which I'm going to teach you at Waiheke. So I hope we're going to see you there. This is an old chart. It should have changed by now for you folks. This is a fourth seal chart. This is an old one that you've seen before, but I thought it was timely to show it to you again because particularly in view of the comment that Mitzi Seventh just made to me, that this is one of his tools, the fourth seal, for his trading. And you can see here, this was the commentary from Frank DB, who helps me with this fourth seal stuff weekly. And he was saying that these 2 significant cycles in here should give us a top. This is back in 2013, just a chart that I came across and thought we haven't talked about this for a while, and I want to show it to you. It's still as valid now as it was then. And down here in November 2000, he said this is the week where the 44 cycles at work, and there is another cycle in there. Crude should be at or moving into a low in one of these periods. Well, as you can see, it went about 2 days further, and that was it. That was the intermediate low. And the point I'm trying to make in here is that we're using this, Kevin. This is one thing you can do straight away. How do we manipulate the market? We can use the fourth seal signals as a trend indicator. And you'll see here that we have lots of buy signals. These are all TO3 and TO3 plus signals, and none of them really go anywhere. There's a couple of nice trades. There's a good one there. There's a good one there. This one never actually gets elected. This one goes doesn't get elected. That's a good one. This doesn't get elected. This doesn't get elected. This one gives you a day and a half up. This gives you 1 day up. and this gives you a little tiny top, but it doesn't give you a first profitable close to way over here. But look at the sell signals, because they're with the trend as set out with the fourth seal. Sell, that's a good trade. Sell this 3 days down. Sell this 5, 6 days down. Sell this, I don't know, 7, 8 days down. Sell this 1, 2, 3, 4, 5, 6 days down. Sell this 3, 4, 5, 6, 7 days down. Sell this 1 day down, gets you your profit straight away. You can see that if you're using the fourth seal as a filter, they're the ones to hold on to, Kevin. So Kevin left. He asked that question, how do we manipulate the market? Didn't like the answer and left. They always have those sorts of people, unfortunately. If you can tell them in 1 word or less, they'll be happy. If it requires a bit of thought and a bit of concentration, and worst of all, maybe a bit of work, guys, that's not too interesting for them. So that's pretty typical of what we get here. Okay, here's our compliance statement. I do urge you to read this. Trading is a risky business, involves risk, and it involves a lot of risk if you don't know how to trade. And I really do urge you to become a good, safe, and profitable trader. And I hope I'm going to see as many of you as possible at the Waiheke tutorial. And I can tell you for a fact there is no other way of getting to where I want to take you. You won't see it or hear it anywhere else. Okay, that's the end of the slideshow, and I want to go now and look at some markets with you. Particularly, we want to have a look at the CRB index. This is for Daryl, who asked us to have a look at this. He's been trading grains and wondering what's happening. And it's a long time since we looked at this index, and this is the commodity index. It's a group of commodities weighted. The one that's not in here particularly heavily, these are more traditional markets. In fact, I don't know if it's even in here at all, is iron ore. And I'm sorry that I can't show you an iron ore chart. The iron ore futures contract, so far as I know, is only traded on the Singapore Exchange, SGI, and I don't think Trade Navigator have a chart for it. If I'm wrong, please let me know. But particularly in Australia, where the Aussie dollar has been tumbling down, it's a commodity currency, a bit like Canada, and the drop in price in iron ore and coal really has been quite dramatic. We had prices up there at $117, $118. A lot of new exploration, a lot of hoo-ha, a lot of money wasted. It usually happens when there's a boom. It's down to $48, and only the majors are really doing well with those with the cheapest prices from historic discoveries. A lot of the companies who came into it later on the boom are really struggling. And it's interesting that this is actually a much bigger deal than we thought, Daryl, so thanks for asking me to show you this chart. When we looked at it last, we were following this series of retracements here, the 552.90, 506, these ones in here, and they were biting pretty nicely. And the last one we looked at this was 417. We got this little low here and then a rally back up. Since then, I've added another retracement. This was the last retracement in the group. Let me bring this in. This retracement essentially, go get the searchlight again, folks, which I think is easier to see, the spotlight they call it. This retracement, these retracements are running from this high here down to this low right back in 2008. And you can see it's been running down into these retracements, hitting on them, hitting on them, hitting on them, rally back up into them, down, nothing straight through, nothing straight through, grabs this one, rallies back up, and it's now been held at the 389.70, which wasn't on this chart last time I showed you, because the 363.10 is the last level. That's the black line. David Webb's a king of the black lines. He loves them. They're quite extraordinary. You only got to look at the members' charts to see what's happening there all the time. And that's the ultimate retracement for this swing, this operating swing. But there's another one which goes all the way back to March 1999, Daryl, and these new numbers I've added, this lot down here, these are in fact the swing of the retracement back to 1999, so that's that retracement is running from April 2011 back to March 1999, and that's a pretty big deal because it's got a fair way further to go, and the sign will be a close below 363.10. Will tell you that the way the black line works, the probability is this swing will go, that low will be taken out, and we'll then be heading down to 313 and then 238. So this is a very strong bear trend. I know we've seen some of the grain starting to rally, but this trend is down. It does have rallies. Some of them are quite decent rallies, multi-month rallies, but important to keep your eye on the main charts here. And what we'll be looking for is a break of 363.10 on a closing basis, and that will tell us that there's going to be a lot more heartache for farmers, miners, and a lot of the production people in this industry. The other chart I wanted to show you, as usual, I like to make sure we keep up to date on what's happening with the equities, and for that we should find the S&P index, which is here. This is our 6-day chart. This is the long-term trading channel, which has been on here pretty much since March 2009 or shortly after. You'll see that we have contact with our first push out, and then further on as well. Now, I've left this trading channel where it is because I like the way that two standard deviations, the first, the thicker line, for those of you who haven't seen these channels before, is the median. The first line down is one standard deviation. The next line down is two standard deviations. And these Danielcode trading channels are quite extraordinary. You just look at this market and you think any of it's been random. It's been defined by this same Danielcode trading channel all the way since March. It's moved down to the one standard deviation on numerous occasions. It's got to the two standard deviation only once. That was in October 2011. And right there, it's kicked off a key reversal bar and gone back up, tracking the median again, as it does. You could argue that this is the first push out back in January 2010, and we could, I guess, back this off a little bit here until we caught that bar, but it doesn't really do us much good. There it is. There's that bar. There's the last position of the bar. It doesn't account for this price action down here, which is why I have had this bar locked there for a long time. There's your first push out. There's second contact, and here's your two standard deviation properly defined. So what's happened here? This market got very excited. It started running up here at two standard deviations. This is very extreme price action, folks. You can see how it couldn't break through here. It started this assault in December 2014. We're still banging away at it in April 2015, which is when we got the fourth seal signal that there needed to be a substantial correction. And we got that, and down it came. So here's your median. This is a close below the median here. And on another chart, it was actually a close below one standard deviation from the mean. If we move this along, I might be able to demonstrate that for you. Okay, so we've still met our requirements. I've moved this trading channel. I've now got contact with the first push out. Contact with this point up here. They're a long way apart, which is good. We've still got our definition of our two standard deviation there perfectly. And now what we can see is we've had, this is one standard deviation here. We've had 1, 2, 3 closes below one standard deviation from the mean, which is our first warning signal that the trend is going to change. And we've now had a rally back up to the median. This is all really standard. Let me show you what happened back here. This is, I've got to move that a bit to get this to expand. And this is in fact the .com top in 2000. I'll see if I can get this to expand a bit. And there was the .com top, and those of you who were around and trading then was pretty wild days. And here was the trading channel all the way up into the high. This is the 2007 high, October. And look what happened. Here's your median running up here. This is the median, this one here. I wonder if I can just put a bar on that to show you a bit more clearly. Okay. That's the median there. It's in red, so let me change it to blue so you don't get hopelessly confused. Just want to change it, likes red. Now it's blue. Okay, so there's the median up here. You can see what's happening in here. It's hit the median, comes down. There's a close below one standard deviation. There's a second close. There's a third close. It's down to the 2 standard deviation, does the key reversal and the snapback rally, and it tries to regain the median. And right in here is where it fails. Okay, and then you get the same thing. You run down to the 2 standard deviation, hope springeth eternal, looking for recovery from that, got 2 bars up. Remember, this is a 6-day chart. Then you got this close here, which is January 2008, and that's the first close outside 2 standard deviations from the mean, and that's what set it off. Boom, boom, boom. Bit of a rally, bit of mucking around, and then you get the crash. And for those of you who did the webinar with me 2 weeks ago, you'll remember I talked about waterfall patterns, the patterns that precede the really, really big fast moves, particularly on the downside. They're old saying, markets go up by the stairs and down by the escalator. Most of these big moves, fast moves, are down, this is exactly what we saw. If we take this down to a daily basis, you can see this, the start of this back in 2007, exactly on the waterfall analysis, part of which I showed you at the last tutorial, so at the last webinar, I should say. So be mindful. This is in a position at the moment of great vulnerability. So that's what it's done. If we use this newer interpretation, or the latest interpretation of our trading channel, here we are. It's hitting the 1 standard deviation, number of closes below 1 standard deviation. It's now trying to regain the median. This is where, if it's going to fail, this is the highest probability of where it's going to fail, at or near the median. And if it does, we're going to just have a great deal of fun with this market, because we're always on the right side of markets. So it's always an enjoyable experience. Okay, folks, I had a number of markets I wanted to show you, but I am not going to do that because we're going to run out of time. We've gone for nearly an hour here, and I've got a few questions that I need to answer as usual. So please shoot through your questions. You can just type them out. You can type them out in the questions box, and I'll see them. Who makes the best? I thought I'd discuss this. Someone just said, "Who makes the best, and who makes the worst?" This is Scott. Who makes the best, and who makes the worst trade as well? I don't actually think it's an occupation, but you know, it's interesting to put some of these some of the people I've met into categories. As I said. Dentists I've known, they seem to make very, very good traders. They have important analytical skills, and then they're builders. I mean, dentists are really mini engineers. For those of you who haven't got to that stage, by the time you're having root canals and crowns on your molars, you can see there's actually a little construction project going on at the back of your mouth. And they're people who have a plan, who stick to it, who persevere till the job's finished. And I know a lot of a number of dentists who are very, very good traders, engineers the same, people with those sorts of disciplines. Now, interestingly enough, one of the early tutorials I went to when I was trying to learn how to trade, and I thought that you could learn this stuff by reading books, and being an attorney myself, you always think you can learn it all from books, which you can't. And I then went to a whole lot of seminars and tutorials all around the world, and one of which was Larry Williams in near the airport in Los Angeles. I can remember Larry saying, lawyers and doctors make the worst traders. And being a lawyer myself, I was interested in that, and said, why do you say that? And he said, well, lawyers and doctors are brought up to believe in precedent, that what happened last time will happen again. And they have fixed and firm minds on that point. And it wasn't until having a few drinks with Larry later on, or it might have even been on another occasion, that he told me that he had an ambition of becoming a lawyer, and he sat for the bar exams and failed them. So Larry was a frustrated lawyer, which might be why he didn't have anything kind to say about us. But lots of other people don't like lawyers in particular. It doesn't really mean anything. You either got the application for this or not. Alan's asked me to look at the dollar and gold. Keep going. People will stay on. Do you think so, Alan? It'd be great if they do. Very important to look at gold. I've actually got a weekly chart of gold here that we haven't looked at for a while, so thanks for that. And here it is. And we had, this is gold on the weekly chart. Pretty important. Let me scrunch a bit more data in. Let's get back up to date where we were with this, that we had, that's about it. We had back here, this is a weekly chart, and this was the week ending July the 24th. Excuse me, Chase. We had this low that came right at the Danielcode blue line of 1073.90. And it came exactly at the Danielcode time cycle. It was an inverted time cycle. The 59 cycle generally gives us tops, but this one gave us a bottom. They can switch, so we're always aware of that. And then we got this nice encouraging rally that ran all the way up to here in October 2016. And we can see that, we can take that one off, and we can actually take the 1190 off as well. That comes off. We got this run up to 1190.8, and remember, this is only correcting the minor rally. It goes from here to here. Okay, I'll just get rid of the extension there. Don't get confused. This is not a 4th seal line. This one over here is. This is a 5th seal line. Gave us that low. This is just to highlight to you that this is not even corrected the major swing. This is the major swing up here. And these are the numbers from the correction for the major swing. And it hasn't been hitting those. It's hitting the correction of the minor swing. And that's why it's important to know which swing is it. Matt's left. Call me later. Okay. Alan, that's why it's important to know which swing is being corrected. When I put two lots of retracements on, you should be able to identify which swing is being corrected. So that's one swing. This is the other one up to here. And these are the second numbers. In this case, all that was being corrected is this inside group of numbers. The smallest swing, the numbers will always go first. This was just really correcting this swing back to May 2015. It really needed to break through here and start correcting these bigger swings up here, or better still, start tracking the blue lines to the upside, which it hasn't done. And now we've had a breakdown, and here was our trading channel, and it's gone. It's just no longer there. We, can push it along further, but it stops being a trading channel. It becomes a standard regression channel, which has no forecasting basis for us. So let's see where our next support for gold is going to be. This is your Danielcode trading tool. It's under this picture here, Dan. This is Dan the Hedgehog, our mascot, and you get all these tools when you become a member of the Danielcode. If you haven't got them, contact Terry, please, at support@thedanielcode.com, and we can see how accurate this stuff is. Extraordinary. It's down to 1103. It's correcting. That's a 74% correction of the swing, which is further than you like to see it go for you bulls. It's not fatal yet. It's still got the black line at 1085.4 on the weekly chart. But in a trending market, fast trending markets only correct the first two levels of the Danielcode, 29.6, then 37.5. This correction is fairly deep and pretty well kills the upward momentum of this market. So the outlook for gold is not looking great for you longer term holders at this time. The other question from Alan, he wanted to have a look at the DX, the US dollar index. Let's see what we can find from that. Let's see what we've got for DX. I don't think we've got a 6-day chart for DX on here. Folks, anything you're interested in, if you shoot me an email before the webinar starts, here we have got one, I can prepare these charts for you so I can give you a better response. Here's DX. This is, have a look where this market's come from. This is one of the great, another one of the great con jobs of world commerce. This is where it was back in 2000. Have a look at it. Marvelous 120 DX. This is the US dollar against a basket of currencies, which is a pretty good way to look at it. And it was right up there, and then it's just been a forced devaluation all the way down. And one of the things that the Fed is always concerned about is keeping the US dollar relatively cheap on a comparable basis, a world parity basis, because it affects their exporters. And every government's trying to do this. It's not just the US. Australia, the Federal Reserve here has been jawboning the Aussie down. I don't know if jawboning does a lot of good, but changing your policy settings certainly does. And having the official cash interest rate at effectively zero, as it has been for almost 8 years now, can you believe it, in the US, has kept the US dollar index weak. Here was the rally out for the big correction. It went up to this 100.830 was the Danielcode number, 107.85. You want to know where these markets are going, put your retracements on it, use your Danielcode numbers, and they'll just track them off and track them off. You'll be amazed. It ignored this number on the way up, 93.390. You see it just shot straight through it. Very often when markets ignore a Danielcode number, they'll do this. They'll come back and test it from the other side, which is why this market has sat exactly on that number twice. 3 times it went a bit too far, just pulled out all the stops here, got a bit excited, and now it's sort of sitting in nowhere land. Bias is to the upside. For this thing to really take off, the Fed's got to raise interest rates. There's been 8 years of rhetoric, 8 years of people slavishly looking at every word that's spoken by the Fed governor, and there's no point in it, because the bias is cheap money for official money if you're the right people. Of course, it's not cheap for you and me, and particularly if you live in Australia or New Zealand. Let's just say in America, you can't get anywhere near the official interest rates. That's reserved for the big boys that the Reserve likes to play with. It's not for the likes of us. But if they've managed to keep this thing weak and almost zero interest rates for 8 years, nothing much is going to change in the near future. They've had tons of opportunities, and they're jawboning about it a bit, as they've got to keep some of the economists happy. but you know, a quarter point change here or there is going to do absolutely nothing. Okay, is that it, folks? Have we got yeah, we got the questions out the way. That's great. Okie doke. Well, it's Friday afternoon here. Just gone 12:30 on Friday at the sunny Gold Coast in Australia. And I thank you for your attendance. Do please put pen to paper or tap out an email. Let me know if you're coming to the tutorial. If you haven't yet confirmed, I'd appreciate if you would as soon as possible. If you need some accommodation on paying the fee, I'm happy to do that and talk to you about that, whatever suits you. And I'm looking forward. Peter, is that Peter or Pieter? I'm going to reply to your email today, mate, whatever you like. And I'm looking forward to meeting you in Waiheke. Peter's going to do the Waiheke tutorial. We'll get him blasting and flying, mate. Okay, so folks, great for that. Do drop me an email, please, if you're coming to the tutorial and you haven't confirmed already. And I look forward to seeing you over there. And we'll have the next tutorial, the next webinar, I should say, will be as usual in a fortnight. Please email me with anything that you'd particularly like me to address. Give me a chance to prepare the chart so I can show you. So thanks for your attention, folks. Thanks for being here with me. I love doing these webinars. It's great to see you all, and I very much appreciate your support. And for that, I'll say goodbye. And James, cheers. Yes, I wish you a happy weekend, guys. And I'm a bit closer to it than you are, but enjoy. And we'll be attacking them again next week. Thanks for your attendance. Bye-bye.